Hey, it's Jay Knows Credit back with another video for you all. Today we're going to talk about home buying cheat codes. Just a lot of people ask me about how they can buy a mortgage, or how they can get approved for one. And there's a lot of videos on a lot of the basic things, but I want to go over a couple of things that I haven't really seen touched on. So without further ado, here we go. All right. So the first thing I want to talk about is the bank statement hack. Okay. The bank statement is what the bank's going to ask you for when you're applying for the mortgage. They want to see, copies of your bank statement. Some banks going to do 3 months, 6 months, stuff like that. The reason why this is important is because they want to see, your financial background as far as how much money has gone into your account and out of your account. But the main focus is really going to be on your savings account. Okay. So what you want to do, you want to find out for your particular bank, when they're actually making the bank statement. What is the date of that bank statement? And what you want to do is make sure that you fund a lot of money into your savings account. So if you say you got a bill that's due on the 10th and the reporting date for your bank statement is on the 8th, just keep that money in the bank throughout the 8th and then wait for that to, sit in your savings account before you actually pay that bill that's on the 10th. So that way the statement can report that you have that additional money in your savings account. All right. The more money that's in your savings account, the more money, they can be able to trust you with that mortgage. I know that sounds crazy, but if you have a consistency with your with your bank statement, with them showing that you have this money in your savings account, then they're more willing to say, okay, this guy, or this woman knows how to manage their money properly. They've got X amount of dollars saved. They've had this money saved now for the past 6 months. Every month has been increasing or something like that. So they can say that, hey, this person is, able to save money. Sounds crazy, I know, but definitely works. The next thing is going to talk about your tax returns. Now, a lot of people might have to do amended tax returns just because they might have, a lot of deductions that they took out to where they may not qualify for the mortgage that they want to qualify for. So if you do an amended return, a lot of times, of course, in this case, you're going to do it so that way you might have to pay some more money when it comes to what you owe the IRS. But here's the thing. Let's say you owe the government $3,000, the IRS. You can make a payment arrangement plan to pay that money back over a period of time. Take that amended return and go and get the mortgage you want. And you might save, $10,000, $20,000, $30,000 by getting into the first phase of the house, or the first building phase of the house, or, you just got a good deal on that house. And all you had to do was just amend your returns and, pay a couple of bucks, couple of thousand or whatever. And that could have saved you tens of thousands of dollars. All right. And that goes for your 1099s as well. 1099s, you may not want to take all of the losses on your business. You might want to just say, okay, I'm just going to suck it up, and, I might have to just pay the government more money just so I can be able to get into this house. Not like just like with the other thing, you can actually make a payment arrangement and pay them over time. And if you have a business, of course, you can actually pay them every 3 years. You don't have to pay them every year. So that's one of the good things as well. So there's another workaround you can do in order to just show that you have the money to pay. Now, when it comes to the scores, a lot of the scores, when it comes to mortgages, they don't want to tell you what the scoring model they're using. A lot of it's covered up. But I found out that the Equifax, only the Equifax score power is their score power. So you have to look that up and find that one. You can go to Equifax 3-in-1 report. You can actually pay for the score power. I think it's like $19.95. But that score power is going to be what they're going to use for to tri-merge scores. A lot of these companies now are using tri-merge. Some of them use other FICO methods, but most of them are going to use a tri-merge score, which is usually going to be a lot lower than your FICO 8 scores. You might be pulling up some on some other website, because most websites now are going to use a FICO 8 or maybe even, a FICO 2 score. I mean, but most of them are going to use a FICO 8 score nowadays. I know tri-merge is going to use a FICO 4 scoring model. Now for Experian is going to use maybe a FICO 2 or FICO 98, or they might use a FICO 4 model. It kind of fluctuates around. So if you actually were to get your tri-merge scores, you can actually go to Experian. You can actually find your FICO 2s and FICO 4 scores. And it kind of gives you more of a better understanding of, what those scores are. See which ones are the lowest scores, because you want to always be prepared when you're walking into trying to get a mortgage. Now, I say that to say that a lot of people are not really ready to get a mortgage right now. And so what they can do is actually apply for one. I know that sounds crazy, but if you go ahead and apply for one, you can kind of see what your scores are, because they have to tell you what your scores are that they're running. So if you already have the FICO 2s, the FICO 4s, you got the score power, you can kind of see, okay, they pulled this score, I have this score in front of me, so I know what I'll be dealing with. Now, getting your mortgage ran, your score might drop 3 points. Maximum, it should drop 9 points. Most times 3 points. As long as you don't have any, really heavy things on your credit that are a negative on there. But that'll tell you, where you are. Now, no PMI is best. Okay, private mortgage insurance, of course. But I know everybody's situation is different. But you want to look for different programs that don't include any PMI, because I know that a lot of people don't really have, 15%, 20%, 10%. To put down on the house in order to get no PMI. So you definitely want to look at a lot of the smaller banks, or you want to look at a lot of the credit unions, because with credit unions, of course, even with Navy Federal Credit Union, they have where they have a program where they do like 0 to 3% that you can put down and get a mortgage with no PMI. All right, so you can investigate other banks and see what banks work best for you and your situation. But I want to talk a little bit more about the PMI. A lot of people don't know that, that PMI attachment, and they get locked into that. So when you get that PMI insurance that you're paying, none of that money is going to actually go towards that mortgage. Okay, so you have to pay it down to 80% before it actually falls off. So let's say you have that PMI, you're paying, $200 a month. Okay, you got a $300,000 mortgage. Well, you're going to pay about $60,000 until you get it down to an 80% level. And even in that case, you have to literally apply to get it to come off your insurance. I'm sorry, to get it to come off your mortgage. Now, when it gets down to 78%, of course, they'll take it off automatically. So that might be, maybe like $66,000 off the top of my head that you're going to be paying just to be able to get it off of your mortgage. And that money that you just paid didn't go towards your mortgage at all. This is money you just kind of threw in a bucket. All right. So you definitely want to investigate and see if it's possible. And if you're not ready to get your mortgage right this second, there's nothing wrong with, planning ahead. And that's what this video is for. So you can plan ahead, as well as, some people might not know they can get a mortgage now just by, doing a couple of things like doing an immediate return, something like that. And this can help somebody go out and, run and get a house here in the next couple months, or just start out for, next January to where they start not taking that loss, or, whatever the case may be. So I just want everybody to, look over this video, and, if you have to play it again. You can take some notes. But when it comes to the underwriting process and what they do at these different, mortgage companies, they do a lot of things to kind of give you a headache. They want to make you feel frustrated. Everybody's not looking to just approve you. They're trying to go through every which way they can figure out, how they can disqualify you as well from getting that mortgage. So I'm trying to do everything I can possible so that way you can know some of the things that they're going to be looking at and be prepared and not being shocked, because when you're applying for a mortgage, there's nothing worse than, getting disappointed and not getting approved because you didn't really know all the steps you could take to prepare yourself and kind of know what's going on walking in the door. All right. So, try not to get any PMI. Look at your bank statements. Make sure it's consistency that, you have money going in that savings account. Watch that statement date like you watch your credit card statement dates and, paying those off. Okay. Make sure your credit cards, by the way, are down to 1 to 9% of the actual limits on the cards. That'll bring your scores up higher. That way you can actually get, a better rate. And of course, you can always get a better rate when you're closing, but this is some steps you can take in order for them to take you more seriously when you're coming up in there saying you want to buy a house. All right. Hopefully some of this information has helped somebody. And like I said, if you need to go back over it, pause the screen if you have to, but definitely want to help everybody with getting that mortgage they want, or getting another mortgage or second house, third house, things like that. So hope you all enjoyed this video. Thank you so much for watching and subscribing. Trying to make more videos more consistently. I do have a couple of videos I already have planned to drop for you guys, but you guys have a great day. Whatever you're watching this, make sure you're watching your credit, paying attention to it, and understand that credit is queen. This is J Knows Credit signing out. Have a great day.